So let's do it. Today I'm sitting down with Michael Tama, who came to visit in near Montreal. We're in Granby now, a bit off the city. It's a very quiet place. But we want to talk about the mindset of a professional trader. What things separate the normal traders, the losing ones, from the good ones who are making a lot of money trading? Are there some different trades? Is it about like the techniques they use or something else? So Michael will be here to answer that. It's been trading now for how many years?
20 something?
24?
Yeah, 24. Yeah.
24 years, which is a lot more than you for sure, more than double. So yeah, if you have any questions, post them in the chat below. Chat on YouTube and on social media should be good. Let us know if you have any questions. We'll be able to answer the video here when we're live. But yeah, let's kind of go and keep going with this. Michael, tell me a bit more about when you think of a trader who's losing money versus one who's making money consistently. What's the main difference? Is it like a mindset thing? Is it a strategy they use? Is it something else? Is it only risk management? Like, what's the difference there?
Yeah, I mean, there's many factors that play into it, but really what comes down to two things. Is it your process and strategy, or is it the markets? And it's usually one or the other. So if it's the markets, very easy fix. Just you have to let it play out and randomness will do its thing. But if it's not, it's the person in the mirror, then we have to dissect what is it? Is it the strategy itself? Is it your ability to execute the strategy? A big one. A lot of good strategies, but some people just can't do it, and maybe you have to find one you have to do it. So first thing, is it the markets? Second, look in the mirror and see take the next step to do.
I like it. Tell me about the mindset of a professional trader. What are some things that you think traders think about, or how do they see things differently than the losing traders?
Yeah, well, it's one thing they don't see, and that's the money. They take the money. It's hard. I get it. You know, we're here for the P&L. But the pros just take it off the screen. They don't worry about it. They're so focused on the process. Because why? They know the process is going to get them to where they want to go. The market's going to give you a bad day. That's fine. You can't control that. So the first thing, the first takeaway here, and I'm going to give you several, is really make a commitment to focus on your process. I get it. Everybody wants to see the profitability and the green numbers at the end of the day. But focus on the process, the money will take care of itself.
I like it. Sounds good. What about when people have losses? Do you feel bad when you have a loss, or when you have a couple of losses in a row? Do you feel like it's just part of the process?
It comes down to what we originally talked about. If I'm going to feel bad if I didn't follow my process, if I broke my rules, or if I tried to catch up with bigger size because I had to be break even for the day. Yeah, I'm going to be mad during those days. And every trader should look at that and say, it's unsustainable as a trader if you want to be where you want to be. What you shouldn't be mad at is if you have a red day and you did what you had to do. That's good. That's going to get you to where you want to go. We are in the business of managing losses. We're in the business of managing risk. We're not going to be profitable every day. That's the beauty of the markets. So if you follow your process, do the right thing, measure how your quality is and your compliance, as we talk about, and if it turns red sometimes, fine. Personally, you want a new little quick hack? Don't look at your P&L every day. So now you don't know if you're red or green. All right. So there's a little quick hack you can do. I know it's not easy, but just try and get that P&L off your screen.
Totally agree with that, for sure. What about strategies? Are there strategies that, I mean, we always hear the beginners talk about different strategies that they use, they watch on YouTube. Do the traders that trade for 20-something years use the same stuff, or is it like they have different ways of trading?
From my experience, and one of the beautiful things about having several years of experience is you get to meet other traders, and it's interesting. The bigger the size of the accounts, and whether it's a hedge fund or they're managing outside capital, it's amazing how simple their strategies are. Like, it doesn't get more complex. It actually gets more simple. Now, certain strategies can be, certain people have a certain knack to do certain strategies, and some like I could never do, and others I can do that they can't. So find that little niche as part of the whole discovery process, and having a fellow trader or a coach can help you with that and speed that up. But it's amazing and almost scary how simple. How the traders. I was actually in a roundtable at a recent expo, and we were all talking about our strategies. And I actually had to dummy down my strategy description because it was a little more complicated than most of the other ones. So I was almost like embarrassed to have had too many variables to it. So don't think you have to have these 10-page strategies. It's more half a page, a couple of tools to make you decide, let it go. And have a good back test too. Don't enter it unless you have some solid information showing you got at least a chance and a good track record.
I have a question here in the chat about this is Khan Trading asking, how do you build a trading system? Like, what's the process to go through placing trades? Do you have like different steps, different kind of look at the context first, look at this, look at that?
Yeah.
or is it like a simple setup?
Yeah, I mean, it starts with simplicity, and then you sort of build upon that. But again, like I said, a lot of the strategy is very simple. So when you have these sort of layers of confluence, or maybe you want one or two indicators, that's it. And whether you run a back test or just do it manually or just do it in a demo account to give yourself a feel, after a decent sample size, you should know if this is working or not. And there's always trend-based strategies aren't going to work well in like choppy markets, so that may be sort of a killer. But keep it simple, and as you go through them, see, is that track record being relatively consistent? Now, the ability to execute it is a different thing, but that takes time, and you can see not just is it the right strategy, but is it right for you? What are your thoughts, Ian, on this?
I mean, some traders always think that there's like, if you have one strategy, you can make it for a living. You can make a living trading. If you have like just one strategy, you can figure out. I think over time you figure out that one strategy works in one like certain conditions, not all conditions, and having a mix of them is kind of what makes it where you can have a full-time income in trading. Yeah. Otherwise, you're stuck with like these cycles, like good run, bad run, good run, bad run. It might go up on your account over time. Like you might have a good equity curve, but not enough to make it where you can pay your bills every month.
Yeah, and lose these 20-year back tests. I mean, markets change, market evolves, and having a good 3-year back test is more solid probably than having a 20. A lot depends on the markets. Like I said, trend-based strategies probably aren't going to do very well in chop-based markets, and they'll sort of normalize. So, I think sometimes you hear a lot on YouTube about all these different elements to a strategy. Keep it simple. I mean, we're not that intelligent right here. I mean, the brain pool is kind of limited here, but we know how to execute a plan, and that's really how we get to where we want to go.
Good point. Tell me about how do you manage your trade. Do you have any favorite way to manage your trade? I'll share mine after if you want, but tell me how you manage your trades in general.
Yeah, well, the general default strategy or answer to that is my management comes before I push the button. So once I enter, the management pretty much has dictated itself. Now, there may be certain things that happen during a trade that have a rule, say, okay, I have to get out before this or whatever, but my management has already been dictated. So my stop, target, I tend to just let it go. One, for a lifestyle standpoint, but two, is I have stats and it's just repeatable year after year. The general rule, the more I touch, the worse I do. So try and get the habit of laying back, walk away from the screen, do what you got to do, but the management starts before you push the button, not after.
I like it. This is really what I had to go against for the past few years because I've always been like fixed target, like 2-1, and then you get out and then that's it. But over the years, I kind of had to, especially last year, I had to really kind of look into how can I like leverage the trends, especially now. I was trading reversals only, now I trade more trends. So how can I really leverage these trends? And I think for me, it's like having a way to bump up your stop loss or like have a rule where if like the price closes below moving average, then I'll get out. But it has to close below. So I'm going to check every day, make sure it doesn't close below. It's like a quick check once per day. But it gives me a place where if it goes to that point, I'm not losing all my profit that I had on this trade. It doesn't go back to break even, but it goes back to like a smaller profits, which kind of helps to build up the account over time.
Yeah, and you have rules. I mean, you basically just subscribe to your trading plan. Yeah. So you have your rules. If this happens, I'm going to get out. If this happens, I'm going to stay in. By the way, welcome to the trend-based side of the world. It's a lot of fun.
Good to be here.
Yeah, it's good. Yeah. It took me a few years, but I got into crossover. But no, we do a little bit of both. But yeah, the fact that you have rules. When this happens, that happens. Very if-then. When I see trade journal reviews and I see posts and stuff say, well, I got out because I thought it was going to do this, or it looked like it was doing this. Stop thinking. That's usually where you get hurt. Every time I think, my track record is terrible. So just let it go. It takes a little discipline to walk away. I get it. And maybe it's in the back of your head thinking, oh, what is it doing now? But let it play out. If you have an edge, you have a positive expectancy, those numbers will play out. Just hands off. It's part of the building that trading muscle to get you where you want to go.
Love that. Awesome. Yeah. Are you the amazing guy? I don't know. I don't know who's this. That's good. Good. Yeah. Maybe that's you. Awesome. I appreciate it.
No, I think it's you.
All right. Love it. Question here. We have a question about can you turn profitable with only forward testing without like no back test? You just like test the strategy live. You improve based on what you see. You kind of tweak the rules as you go. Or do you need to go back and like back test?
I'm curious to hear what your answer is. I'm going to say something that may be, I don't say controversial. I don't think you need a back test. I mean, if you're forward testing it and doing it live, now you may find out it's not working, and then a back test maybe would have told you a lot earlier. But I kind of like to get my hands dirty. I'm kind of old school, and quite honestly, a systemic generated piece of information may help me, but I find for confidence reasons, just getting my hands dirty in a live environment is much more valuable. But I don't know, what do you think?
I think in backtest is good to know what to expect, but I don't think you need to really trade live. Like if you have a strategy that works, you could just go in. Like we see guys in the program sometimes who just learn a strategy, they go live in the market, or they go demo for a while, they test, they trade it, and they have good results. They didn't know the whole backtest, but the backtest like helps you set expectations because to gather like maybe 5 years of data in a live like trading environment will take time. You can gather like in the backtest to know like what the drawdown is like in the past, what you can expect to lose, what the odds are, like what's the win rate, and how many losses you have in a row, consecutive losses, consecutive wins. That gives you a good idea of like what to expect.
Yeah, and it gives you confidence too. I mean,
Yeah.
if you run a back test that you're excited about a strategy and you run it, go, wow, this is pretty cool. Confidence is very, very important, especially in the early stages of a strategy. But the one thing a back test is not going to show you is, are you able to execute that? It may show the numbers may play out, but are you able to execute? I mean, would I have taken that trade at 3 a.m. in the morning? In some overseas currency.
Yeah.
So the ability to execute is a part of backtesting, at least the electronic software version. That kind of is missing, and you need both. The reality is you'll need both. So consider that. Forward testing, I don't think there's anything wrong with it. You really get your hands dirty. You find little things that you never would have learned in a backtest.
I think it's important to not be too quick to tweak things. Like if you have, let's say you go live and then you have like 5 losing trades and you want to change everything because it doesn't work. You got to give it time too. You got to see like on a large number of trades how it performs. Is it good enough? Do you have to tweak something? Because you could go in like have 5 losses, then you want to, like you don't know if in the backtest it's normal. Maybe it happens like every month you have 5 losses in a row and it's just part of it.
And if you have a trading buddy and you're working on the same strategy, look at their results. Like, there's a big difference, and what did they do differently? Or maybe you both come up with the same answers, which actually is even more confirmation. So, a lot of ways to play around with it. But I agree. How you handle a backtest of 20 years may have 5 or 6 losses in a row. How would you have handled that? The backtest is not going to tell you that. So, keep that in mind.
Love it.
Good group today. Love it.
Yeah. Let me see. Okay. What about when you go live and then you have, you backtest, you have good results, you go live, you have bad results. What's the issue there? Is this something you can change, or should you drop it and like change strategies?
Yeah, welcome to the world of being a trader, right? I mean, you get so many times the markets, and I've done it's where you're all excited, you're ready to go, and like, leave it to the markets to spoil the party, I think the key is, the first thing to do is, one, take a deep breath, and don't give up on some of these things, especially if they have an historical positive backtest or someone has shown that. Find out the why. What is it? Is it randomness? A lot of times the markets just have randomness. Like we said before, trend-based markets aren't going to work well in a consolidating market. So maybe that one time, that first week, the market's a little choppy a little bit. So try to find out the why and use a sort of valid sample. So don't give up on something first. Have yourself a decent sample. Maybe it's 100 trades, 150, or if you're swinging, maybe 50 or so. Give it a chance. Say, okay, now I can make an honest assessment. Is this working or not? Or maybe it's just not right for me.
Yeah, totally agree with that. Yeah, data means everything, but it's good. Let's go with this here. What do traders get? Like, what do traders get wrong? You see 95% of traders losing money. That's what you hear all the time. We hear this stat all the time. What do you think is the difference between losing money and being profitable overall? Is it the mindset? Like I asked you before, but tell me what you think.
Well, I think a lot of it is the mindset too. And because, the best traders, even if something's not working, they'll shift, they'll adjust, maybe move strategies. But here's the one thing I have, and I kind of question that 90% of the traders fail. And what I found is they don't fail, they just quit.
Yeah.
So, they reach this thing we call the valley of disappointment, where it's not going to work perfectly like on day one. So you go to this little thing where your maybe backtest results or your expectations, or maybe a fellow trader has maybe a lot more experience, is reaching a certain number and yours is not. So that gap is that sort of disappointment. I was expecting, I'm going to quit my job and I expect to have this much money every week, and then it doesn't happen. So that valley of disappointment is where people not, blow accounts, where they just quit. So, or not just fail, but they quit. So it's almost like sort of a graveyard of like really good, almost traders. And, it's very frustrating on the coaching side to see that. So a lot of times my advice when someone's struggling is just like, if I see what they're doing is right, don't give up. So I become sort of a motivational coach as opposed to a technical trading coach. Because once they can get past that valley of disappointment, you see they just like their whole life changes. Big light bulb moment. It's good to see.
Love that. Yeah, definitely. Yeah.
Yeah.
Cool. I gotta say, I think people come in with the wrong expectations too. Like they come in with the idea of making a living quickly, like getting results quickly because it's trading, it's easy. And then when you don't get that, then you want to quit. Or you get disappointed.
Yeah, and give the traders, new traders, some credit here. Maybe it's the community. It's like sometimes the environment, the
Yeah.
YouTube environment that sets these expectations, and we try to keep it real. But we see on YouTube what happens, and like, yeah, it's unrealistic. This is not easy, but it's very doable, and just need little tweaks here and there. So yeah, it's leave it to the YouTube community sometimes to over embellish a little bit, but once you get to that the other side of disappointment, just have patience and discipline, which is again another mindset thing that needs to be, the muscle has to be built there too.
Love that. Awesome. I gotta say too, like strategy jumping is a big one. People want to go from strategy to strategy. It's not good enough. They change, they switch again. That takes a lot of time, a lot of effort, and also it's just like losing a lot of money.
Yeah, I mean that phase of discovery is really important, and in a sense, like we almost encourage a little bit, like try this, try that, but don't hop. There's a big difference. Get yourself exposed to things, but sort of cut the corners a little bit. Like go through a strategy where traders have been successful, or coaches say, hey, look, try this. This may fit your personality better and stuff. Like you don't have to go through all that hopping. Get people on your side that will kind of eliminate a lot of that, and then you can sort of focus and target on one or two things, and then really more focus on what you're more comfortable with, as opposed to what somebody's trying to jam down your throat, and then you start hopping and stuff. But hopping could be very costly and lead to a lot of frustration. We've been there.
For sure. Once you get tired of it, then that's when you kind of stop and you just move along.
That's it.
A good question for you here. I know you're not so ready for this one, but are you a fan of using stop losses as starting a trade if the market's not going to go in your favor? Like, do you put a stop loss, or do you kind of look if it seems like it's not going against you, then you get out?
Yeah, I'm a big fan of less touching. So I have stops and stuff, particularly on our pairs and equities and stuff. And options is a different game. But yeah, I mean, you have to protect your account, the risk of ruin. And we've been there where you get stopped out and it rips towards your target. It's very a frustrating thing. But I would rather, again, all my decisions, or at least most of them, are made before I push the button. I know what my risk is, I know what my reward is, I know what the math is telling me. Now, once I'm in sort of a profit zone, do I sort of reduce that risk? Of course. But it's very methodical. I'm not thinking, I think this is going to happen. It's just very cookie cutter, very methodical, and I'll let the math play out. What do you do on your
It's
side?
almost too risky what happens in the market. You have like these flash crashes, these big moves sometimes, or even like just news events where you could be in a trade, you think it's not going to do anything for a while, you don't have a stop loss, and it kind of goes super far against you, and then you're kind of stuck. So
yeah, those stops sometimes can kind of death by 1,000 cuts. But think about another form of risk management, which is sizing. Keep your size small. If you want to keep your size small, you have a little more room to play with on the loss side. So keep that in mind. Don't load the boat. That size can really kill you. Good question.
Yeah, good one. Tell me about this one here. Is there a limit of failed trade that you have before you called like you do a timeout for your trading?
I mean, yeah, a lot depends on the individual person too. In scalping, you could have a really bad day and it's just the markets. I mean, you can't go crazy with that 6, 7 in a row or something. If you're keeping your losses small, that's nothing. Like 2 or 3 trades, and the next day you're back on track. So a lot depends on your risk of ruin. Once you start, the key is to identify what your emotions are when this happens. If you're down like one losing trade and all of a sudden you're upping size to get back to break even, yeah, there should be triggers to where we stop that. But if you're just getting frustrated with the process, look at your back test, your history, or the coaches who gave you the strategy, and say, what is the normal like number of losing trades every once in a while? If it's done like 6 or 7 losses, once every month or so, then you have that. You shouldn't be surprised. So keep it in perspective. But I'm more curious about what your emotions. What are you doing during that? Do you see yourself having FOMO? Do you see yourself upping the the little size counter? Those are the triggers to where you got to say, all right, stop. I got to start thinking like a pro trader here, and upping size and getting back to break even is not the way to do it.
I think that's when the backtest kind of helps to you figure out, well, this is the average number of losses I get in a row usually. Now it's like double that, or it's like a lot more than that. Then it's time to pause and think. But you gotta figure out, is it me or is it the market that's kind of producing this?
Is that, yeah. So really, what is your stats telling you? How do you do that? You journal, yeah, right? So you got to do that. But how many times in a back test? Well, historically, it's had 6 or 7 losses in a row every once in a while. But then when you have 3 or 4 in a row in real life, it's like the world is going. Nobody's thinking of a back test, you know, right? It's all like, oh my God, what do I do here? You know, this strategy sucks, you know. So you got to weigh that all together.
You gotta give yourself some buffer too. Like sometimes you could backtest and it's like maybe 10 losses in a row maximum, but then when you go live, it's maybe 11 or 12. Because sometimes you have losses, then you make more mistakes because of these losses. Or like if you backtest 5 years, it's just not enough to tell like in the whole history of the market what maximum losses you have.
Yeah, and keep size small. I mean, you know, if you have 3 or 4 or 5 losses in a row, okay, you're down a couple percent. That's easy to make up. That's normal. That's just normal marketing. But if you're down like 15, 20% of your account after a quote bad day, even if you're doing everything right, you know, now all of a sudden the emotions are going to get. Now you got to start thinking about catching up, and that's usually where the, you know, the death spiral occurs. So.
Love it, awesome.
Yeah.
Tell me about this. Someone wants to trade gold. They want to have a book recommendation for gold trading, or I guess trading in general, but kind of only focusing on one specific instrument.
Yeah, I mean, if you want to be a specialist of 1 or 2 things, go for it. I mean, gold, probably the most logical place to trade it is either a gold ETF or you know, CFD or the futures markets too. Gold can move though, so you know you have to really be careful, especially during like news announcements and things like that. It can rip. I know you trade a lot of gold too.
I like gold,
what was your experience with it?
I mean, I trade gold on the daily chart. So for me, that's like one of the pairs I trade. That's easy because it's trending really well. So you can really buy and hold and then wait for a pullback to get out. So that's easy. I don't see any particular difference with gold and like Forex or something. It's very much the same. Do you know if there's any book specifically about gold trading? I don't think I've seen that before.
You know, I think not specifically on gold, but you know, on futures trading, which is you know, you can handle like the futures markets and stuff. You know, one of the things I take pride in as a coach is never limit somebody. Say, oh, you don't want to trade oil or you don't want to trade wheat because it's too volatile. Who am I to tell the entrepreneur, you know, trader to do that? Find what you like, play with it, dabble, do it in demo.
Yeah.
You might like it. Some of these like high speed type things like oil and stuff, I have a lot of traders who do really, really well, and that's all they do. Is it for me? Didn't really hit me, but that doesn't mean you can't. Find 1 or 2 things, and that's part of your trader journey and your discovery. Find 1 or 2 things. All you need is 1 or 2. And the same strategies I've been using 15, 20 years ago, I'm pretty much using now. Just be the specialist of 1 or 2 and just knock it out of the park. You don't need to be a jack of all trades.
I love it. Someone says, this is Camille was saying he recently was about to pass an evaluation with a prop firm, got to the second phase, or actually the second time, and once he was close to target, he got a losing streak and lost his progress. Tell me, how do you recover from that, and then how do you avoid this in the future?
Well, first of all, and I'm going to say, congratulations. First of all, you're welcome to the world of trading. Happens all the time. But think about, what did you get? You almost got there. That's fantastic. You're obviously doing something right. And you know what? What happened when you had those trades that you just, you know, failed to get to the challenge? Was it you or was it the markets? If it's the markets, can't do anything about it. If it's you, that's okay. What did you do? Learn from it. And next time, not only do you get funded that first time, once you get the first time, it's easier second time, third round. So I would actually say congratulations on getting to that point, because obviously you're doing something right.
Love that.
Good job.
Definitely. I think you got to be not afraid to fail too. You got to be willing to fail some prop firms to pass some other prop firms' account. Like it's very tough to limit yourself to like let's say 10%, and then you got to achieve that, or you completely fail.
Yeah.
It's
and stop using. I mean, let's stop using the word fail. You didn't fail at anything. You know, you just didn't pass it.
Yeah.
It's okay.
Good point.
You're that close. You've obviously doing something right. So, and obviously you have risk management in place. There is something of risk management in place for you to get that close. So, a key component to your success.
You would talk to the guys who are getting the most money from prop firms, like getting the most withdrawals, and they all fail like 10 or 15 accounts. Yeah. It's really funny.
They fail all the time. I mean, failure. Oh, here's your mic drop moment. Failure is part of the success process.
Yeah.
It really is. I mean, and we fail at things all the time, and you know, do things. But just sticking to that process is really the main goal. That's your job as a trader, executing a plan. If it just misses some arbitrary mark that a prop firm does, you'll get them next time.
Love that. Awesome. A few questions. Yeah, I'm going to skip to one that I found. Hold on, right here. This one. I mean, there's a lot of patterns out there with cross section. There's like the head and shoulder. There's a list like long. Like you could print it out on like
Yeah.
maybe 20 pages. Uh, how do you get around all these patterns that has been spotted before? Should you like spot them yourself? Should you trade them, or is it like too much and just like forget it?
I think it's too much. I mean, you know, they work 100% of the time when they work.
Yeah.
You know, it's always easy to just go back and say, oh, this is a head and shoulders reversal with a confirmation bar. I mean, look, let your data tell you what's working, what's not, and there are certain like price action patterns are basically human emotions. So
Yeah.
like a head and shoulders would show that push, pull back, a failure to go higher. I mean, there's a lot of emotion there too, which certainly has some validity. But when you start getting into the simplicity part of it, I just think it's kind of it becomes sort of simplistic. And quite honestly, a lot of my strategies are designed to take advantage of when those fail, because I know a lot of the newer traders are sort of in that, and when they start to panic, I want to be all over it.
Nice. Tell me about you travel a lot. We both travel a lot. You like to go on cruises a lot and trade while you're on the cruise, which is amazing. I traveled Europe for 3 months a few months ago, pretty much trading all the time. What do you like about the trading and traveling lifestyle? Like, what do you want to travel and trade at the same time? Want to like be at home, trade, and go travel, take a break like for 2 weeks and come back?
Yeah, well, I've done that too. So it's a lot of fun, and sometimes you do need a mental break, just to do that. But I think it's the absolute pinnacle lifestyle for me and yourself as well, where you can work but do the things that you want to do. And believe me, when we're traveling and trading, I'm not sitting in front of a screen all day. A lot of times the time changes just is enough for me not to be able to do it. But to have that little engagement involved, make some money, sometimes pay for the trip, especially on cruises. I love to just make enough to where I can pay for the trip itself. But isn't that why we're here? I mean, why are we here? Because we probably were in a situation like in a regular work environment where we didn't want to be, because we couldn't have that flexibility in that lifestyle. But when you marry both together, to me, that is like the greatest. That's why I love this business. It's the greatest combination of fulfillment plus hard work, but really enjoy it, and you can reap those benefits, with family or friends or whatever it is, you go on the trips with.
I'm curious to hear in the chat. You guys can comment and tell us. Do you want to, if you are a profitable trader, do you want to travel or do you want to stay home, or what do you want to do exactly? I'm curious to hear if you guys want to travel or not. We've done some videos about trading and traveling, didn't get many views. People don't seem to really care for it anymore. I used to like go around with the camera traveling and like filming myself all the time while trading, but
Now we just look at
many
food.
years ago. That's many years ago. So curious to see if you guys want to trade and travel, or you just want to trade and stay home, or if you have any other goal. Maybe it's just like trade and be with your family too. It could be like so different. It could be trade and build a business. It could be just trade and like relax on the beach. Curious to hear what you guys want to do with trading.
I'm curious what your definition of freedom is, because freedom is different for everyone. I mean, some freedom could be traveling the world while you're working. Another part of freedom is maybe ability to do caregiving for your family, elderly or something. I mean, everybody has a different why. So one of the goals too, another key takeaway, is to think about why you're doing this and kind of describe your day or describe your perfect week in your life as far as working and enjoying. Obviously, we're traveling traders. We love that part of the style. But I'm curious what you think.
Yeah, let us know in the chat. I'm curious to hear that, or in the comment section after this video goes live here on YouTube or somewhere else. Let's get back to, do you think that scaling into trades is something that pro traders do? Like you have different smaller portions of your trade, you add, then you let the trade run, then you add more, then you add more.
Yeah, it certainly has. I mean, getting an average trade price certainly has its benefits. But again, this is a risk manager talking. I want to hear what you think. But once you start averaging down, it can get very dangerous in regards to risk of ruin. So everybody wants a lower average price. We all do, including myself. But does it compromise my risk of ruin? So if the size is super small on each leg, so to speak, it's doable. One of the key things in my career that literally changed my entire career around is I made a commitment to never add to a losing position. So I'm only going to add on the way up. So a lot of times I'm going to get stopped for break even. But when that thing rips, it's life changing. I mean, my years have changed, including this year actually. A lot of good trending markets and paid off. So I'm going to focus on risk of ruin. I never, ever, ever want to blow an account, and I want to be here for a long time trading. But what do you think, E?
Yeah, I mean, it's definitely doable. It's definitely something I see people do. But there's always like upsides and downsides to everything. You could do it, you could not do it. It really depends like what you prefer. I see guys who like to scale in and not scale out. Some guys want to only scale out. It really depends what you like. I think trend add over time, kind of where I kind of increase over time my position. The average price goes up, but when it's pulled back and you can add more, then you add more, then you add more, and you can have a big position on something. That's kind of good for investing, in my opinion. But I mean, there's different ways to do everything in trading and in investing too.
It's all about risk management, isn't it? I mean,
Yeah.
keeping size small, keeping your stop where you know you are. If you want to add a little bit on the downside, yeah, just again, keep size small and have a risk management place. Learn more about risk of ruin, because once it's over.
Love that. Awesome. Do you guys use this? I guess that's more for you. Do you guys use volume for trading to find possible support resistance areas or take profit level?
I do. Do you? I
No,
don't know about that.
never. No.
Yeah, I'll use volume where, like, if something's tanking, and I see like a big volume spike, that's usually the last of the retailers getting in. So I don't use volume like all the time. I'll use like volume weighted average price and VWAP and things like these kind of quirky indicators, but or tools. But the one I'm looking at on my chart is I really don't look at it, but when markets are tanking and I see a spike, that's where I want to start getting involved. So because that's usually like the last of the crescendo getting in, and those are the ones going to be trapped. So I don't want to be on the other side of that.
I like it, definitely. Cool. Looking here at the chat, people say they want to trade. I'm not a fan of travel. I just want to trade and build my homestead. That's good. Trade for family. That's nice. Someone said here they want to travel too. That's good. Curious to hear what you guys think about this. Yeah, it's fun. Michael, what's your trading setup when you travel or just when you're on the go? Like when you want to keep things simple, what's your traveling and trading setup?
Yeah, I want to know. You definitely have to simplify it a little bit when you're traveling, especially if you're walking around with an app and stuff. You can't have too many indicators and stuff. So I basically want to look at where are we in relation to the open. So for higher than the open, I generally want to put my stop below below the open, and vice versa. So and when things cross, so if you're below the open and it goes above the opening price, now like the eyes light up. So there's like my little trades. Now think about it. Do you need a chart to do what I just described? No. Just an opening price.
Yeah.
Right? Let it play around a little bit, and when it crosses over, great. It's below the opening price, crosses above, stop below the low, I'm going long. Simple things like that. I don't need a lot of charts. I don't want to let heavy. I just need my app. And these apps lately, if they're really good. They're getting better and better, and you can travel and trade just walking the Champs Elysees with an app, a phone app in your hand.
You want to be the only guys I know who trades only with their phone when traveling. Like I couldn't do that. I just wouldn't be able to do it. I think a phone is too small. Maybe that's just me. Maybe that's just like my style of trading. But I feel like a lot of the beginners use like the phone app to trade. I don't know how you do it, but I mean it's good if you can do it.
Yeah, I mean I'm lowering size first of all. I'm not going to be using my regular size, but it keeps me engaged. And your style when you're on the road is really just to pick crumbs up off the floor. But don't lie, those little crumbs, they add up after a while. They pay for trips, they pay for cruises. And so little by little, but you're not looking for that home run. And a lot of times it's set it and forget it, and you have a little notification on your phone. So maybe you're having dinner at the restaurant, maybe you're looking at your loved one in the eyes and all you hear bzz, bzz, and you're like thinking, ooh, I got filled, Yeah. I got filled, pass the potatoes.
Love it.
Yeah.
Any question on Instagram? You have any question on Instagram? Oh no, that's good. All right, cool. Oh, nice, a good one. I just came in here. Do institutional traders or big firm face losing streaks?
All the time.
Yeah.
Right? But here's the thing, and I've been on both sides of this chat. There's risk managers at these firms, and a lot of times I'm hired to oversee them or make sure they set protocols and stuff. So, of course, I mean, if all these people were crushing it, it actually is very scary because their size is probably getting too big. So they have certain rules, not just for the individual trader. Here's a little secret that a lot of people don't know. They'll have individual risk rules for the traders, but they also have the risk for the portfolio, the firm. So a lot of times the risk manager will go like tap, 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 because I need you to like close this position. Like, like, why? It's not you. It's just our firm is too long something, or too long, JPY or something like. So we have to cut back. It sucks. It kind of like I didn't do anything wrong, But yeah, the firms' risk management departments are bigger than like the staffing and things like that, and HR, and it's risk management, and a lot of times bigger firms will have psychologists on tap to help traders come with demons. So absolutely.
How soon do you think your firm will get pissed off if a trader loses money, or like if they're going sideways for a long time? Would they like fire you because you're not performing at all, like you're wasting their money, or would they just kind of stick with you, help you recover and stuff?
Yeah, I mean, a good firm. This is a great question. This is great. A good firm, what I've seen is like they really have resources to help them. There's a big investment when you bring a trader on. By the way, there's a lot of HR costs, a lot of things. Some of these traders are paid some type of salary or something to keep them going in the beginning. They want them to be successful. So it really comes down to, are they executing their plan with efficiency? So if they're just executing a thing and the markets are they got their number from the markets and the markets are kind of just not suitable for that, absolutely they should work. And most of the big firms do. It's when you start getting a little out of hand and start deviating from it, that's when a problem occurs. And that's when there's usually a lot of tension. But I got to tell you, like say a trader goes too big of a size. It's never going to be the case. You know why? The risk manager in the back sets the parameter. You can't push the button and get more size. You can't trade that strategy. It's not like that. So a lot of the risk controls are already done behind the scenes electronic. So a lot of it is teaching them training. They really want it to work out. And if stubbornness is going to get to a trader, then they'll just shut the door.
Like it could.
Yeah. That's when usually they call me. Could you do this? And it's hard. I hate doing that.
Nice. Are you using trailing stops, and how? Let's go with that.
Yeah, I use trailing. I have a very methodical way of doing it, so it's not necessarily probably the optimal way to do it. But I'll use certain internals, such as like volume. I'm looking to see like if it breaks out of a certain sort of range, things like that. I'll move my stop to the area. So I'm not just like 2-to-1, hits target one, go to break even. I'm looking for certain price patterns where they consolidate, and then I'll go, below that too. So I generally found, it's a good question. I've done a study, a big study in my journals that should I trail or should I not? By the way, did you know what the results were? I don't know if I told you this.
No.
About the same.
Wow.
So you would think the trailing would have all these home runs and stuff, but you know what? There's a lot of break evens with trail. And the net effect was about the same. So I'm doing more just just take my T1 targets and just move on. Take my T1s, move on. That seems to be more of my strategy, and I kind of like it. I don't like things hanging around too much, especially overnight in these crazy markets and crazy world we live in.
Makes sense, definitely. I do the same thing. Well, so I have a trailing stop that's like, I probably could like code it or automate it, but it's really done manually now. It's like when it closes below a certain moving average, I'll get out. So I have to wait for the close to happen. I can't just like get out when it just has a wick below. That seems to be the best for me. It's like to wait for the close. So I got to do it like manually. I check the charts like every day when the candle close. I'll close if I need to, but usually it's pretty simple. It's a good way to do it.
We found another skill set that you have here. You can read that stuff. I can't see shit.
That's age.
I need my glasses.
That's age. Yeah, let's do that.
Oh boy.
Okay, I like it. So here we have a question about, do you usually take high probability trades with bad risk to reward, or low probability trades with the great risk to reward? That's a good one.
Yeah, I mean, I tend to my personality tends to go a little more high probability.
Yeah.
I just like, I just like to win, I just want whatever. And I think the thing I bring to the table is not like incredible analytics. It's the risk management element. So if I can keep the risk management element in there, I can go for a higher risk reward. And granted, the fruit basket at the end of the tunnel is not going to be as big, but I just like to live it that way in style. I have option strategies that have more like a 25% win rate, but they're kind of like set it and forget it. I'm not worried about it. I mean, who doesn't like to win?
I'm the same way too. Like I can accept a 50% win rate or like maybe 50, maybe 40 or something. 40 to 50 is fine for me. But I would much rather especially have a first target, take profit that's like a lot closer, 1-to-1 usually. I like to have this like win a lot more, so then I can kind of be more comfortable with the trade. Definitely I'm the same way as you.
Yeah, and I actually stopped tracking my win loss this year.
Oh,
and
nice.
yeah, I felt it really wasn't valuable. It doesn't do anything for me. Profit factor is my paycheck. So I'll measure that. And a lot of times you can use your software, your broker software. They'll give you like a profit factor and, or average win versus average loss. Not important, but win-loss just didn't help me at all. So I just stopped tracking it.
Interesting. If you get some value out of this live stream here, we're doing these questions, make sure you give it a like on YouTube. That would be really appreciated. We'd like to have you here, ask questions. We did this for a long time. I promise we'll get back to it soon. We'll kind of do more lives if we can. Just because it's fun to answer questions and kind of go live and just do a video like this. But also because I know it gets you some results, some value too, and people can get some good advice on this. Give it a like. Make sure you comment below if you are watching the recording too. And we'll make sure we can kind of move on with this. So I really appreciate that. All right, the time goes so fast on these lives. It's crazy. It's like already 50 minutes that we're. Okay, that's an explanation. Or you insert plans, or like you say, oh, like this analysis is bad in this class. Sometimes you can take a good shot.
Report is 20 pages long. Is it the markets that just stopped you out, or is it something you did that deviated that two columns? And then once you have the one where it says yes, I had what was it? Move my stop growth. But the ones that are like good losses, good losses, it's okay. Move on. Focus on the ones, improve better on the ones that you had a say in the loss.
I have a column in my journal where it says like all the losses where I made a mistake, like where I didn't follow my plan or I did something wrong and it ended up being a loss. Then I have a column for like all the trades where I had a loss, but it was like a good trade, a normal
Good losses,
trade.
yeah.
Yeah, good losses. Then I can filter out like what are the reasons why I'm losing money, like what did I do wrong? And then it's usually like the same 3 or 4 reasons anyway.
Yeah.
Same 3 or 4 things. And I can really like, work on these things and make goals for these things. But it's good to kind of see it in different perspectives, like the good one, the bad ones. What's the difference between both?
That's it. Yeah, know your strategy, know your plan, know what you have to do, and learn from it. Bad losses are great opportunities for learning. So look at it as like almost, and I'll put it with somebody's. I'm very sarcastic in my auditing, but I'll put like, congratulations, you just learned what not to do. That's the key to success.
Love it. Yeah. Awesome. I know we've been here for a long time now, about 50 minutes. So I appreciate you guys for being here as always. Give it a like to the video if you liked it. Like online, need to go to work. We'll have some videos to record. We'll talk about strategies, talking about our metas on YouTube. We'll have some videos coming out pretty soon. Make sure you subscribe if you haven't done it already. We'll get these videos out pretty soon. So you can learn how Michael trade, how I trade, kind of get some advice, some more wisdom from a 24-year trader, training for 24 years now. And yeah, we'll catch you back here pretty soon. I appreciate it.
Take care, guys.
All right, talk soon.